Good morning, everybody. Welcome back to Cilinix Crypto. Hope you're all doing great, and welcome to this new video here on Dogecoin. A little bit of a bearish update, right? We broke down. I covered Dogecoin last on Thursday, I think. At Thursday, we already had much more bearish pressure than anticipated. So, you know, getting that drop into 21.5 cents was to be expected, but ultimately dropping down below that was not what I expected, at least. On Thursday I did, but obviously when I made the video on Thursday morning I did not, and overall it did not stay with that breakdown here below our main support level at 21.5 cents, which that was already with volume, right? So the moment you see a high volume breakdown below the key support, which, you know, the key support was right here between 21.7 and 21.2 cents, which was the support of the balance we had up here. Once you see that, you have to draw your own conclusions, right? I think as well. But we had that, left some imbalances to the upside, as you can see, both at 22.3 cents and 21.2 cents. So that's a 0.212. Left some imbalances, but look, imbalances like that, even though they act as a bit of a magnet, right? Price can gravitate towards them. What you also see is that with every reversal, so that's also, for example, what we saw right here. Like, the price always leaves behind imbalances, right? So that's also part of getting an impulse. So this was an impulse move down, and that has caused us to drop down below the balance. On the higher time frames, we are at a crucial support level, though, right? I mean, if you go back to the balance we had down here, you can see we're now at the top of that balance, which is around the strong support level, around 18.5 cents. And now in this case, it's also supported by the fair value gap, a POC that we haven't that we still have to clear around 18.4 cents, so still a little bit lower. And fair value gap, the 0.786 fib. I'm not sure which ones I named and which ones I didn't. But in general, a strong support level, right? And I do expect for now, even though there is quite a lot of fundamental pressure, I do expect that level to hold. Not only Dogecoin is at that strong support level, but no, if you take a look at altcoin indices, such as the Total 3, such as others, they're at major support as well. So do I expect Dogecoin to ultimately hold this support level? Yes. Now, short term, we can still drop down a little bit lower, right? The support level goes down all the way to basically 17.7 cents, so 0.177. But I do expect that I do expect us to hold it. However, then the question becomes, all right, well, can we from here actually get into an uptrend again? And that, I think, is the difficult part, right? Because to get into an uptrend again, if you at least take a look at the 12-hour time frame, but the daily time frame says something similar, technically we would just need to break back above 21 cents. And first of all, that is a major resistance level right now. That was the support of the balance we had, has now turned into resistance, but is also confluent with the 200 EMA, with the trend band, right? The trend band on the 12-hour time frame, on the daily time frame, is also around 21 cents right now. And fundamentally, meme coins are just not doing that well anymore, right? This last week, right? So do I expect us to zoom into the 4-hour time frame right here? Do I expect us to hold support the line here? Do I expect us to find support? Yes. Do I expect us to bounce back up? Yes, I do expect that as well, into 20 cents, maybe into 21 cents. But I would say we need a lot of momentum to break back above 21 cents and to turn bullish. And that is not something I expect, or at least that's not something I have enough indications for right now in the price, in the technicals, or in the fundamentals to tell you that's going to happen. So I would say this is most likely. I'll keep you updated on that for sure, of course. But for now, that's it. So have a great weekend. Take care in these market circumstances especially, and bye.